What if your chart could tell you when a dip is safe to buy and when it's actually a trap? That's what the Fibonacci Entry Bands by Algo Alpha are made for. This indicator shows the trend and builds bands around price using Fibonacci numbers. These bands help you see where price is likely to bounce, where it's stretched too far, and where to take profit. In this video, I'll show you how it works, how to set it up for different time frames, and I'll give you buy and sell trade examples so you can see how to use it in real trading. Let's add it to the chart. Go to TradingView. Then open the Indicators tab from here. In here, search for Fibonacci Entry Bands by Algo Alpha and add this one to the trading chart. Right away, you'll see a smooth line in the middle with bands expanding above and below it. That middle line is called the basis. When the basis is going up, the market is in an uptrend, and we look for buy trades. When the basis is going down, the market is in a downtrend, and we look for sell trades. The bands are drawn using Fibonacci numbers like 0.618, 1.0, and 1.618. These act like zones where price often reacts. If price is above the basis and pulls back into the lower bands, that's where we look for a bounce to buy. If price is below the basis and moves into the upper bands, that's where we look for rejection to sell. The bars also change color. Bright bars show price is close to the main line. Darker bars show price is stretched, and gray bars mean the market is flat and ranging. There are also signals on the chart. You'll see buy or sell markers when the trend changes. There are also these bounce markers when price reacts at a band, so these are also indicated. And this indicator also has small crosses that can show profit-taking areas. Now let's open the settings. You can do that from here. You can pick between ATR or SDEV for the volatility source. A TR makes the bands smoother and less jumpy. SDEV makes them more sensitive and faster. On 1 hour time frame, I prefer ATR because it avoids too many false signals. You can also change the smoothing of the basis line. Higher smoothing makes it slower, lower smoothing makes it faster. And you can adjust how aggressive the take profit crosses are. If you want earlier profit-taking signals, increase it. If you want fewer signals, lower it. Most of the time, the default settings are fine. Now let's see this in a buy trade.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Here we can see the price is trending up, the basis line is pointing up, and bars are green above it. Price pulls back into the 0.618 band. A bounce marker prints, and the next candle closes bullish. That's our signal to open a buy trade. So we can open a buy trade here and put the stop just below the 1.0 band. You can set your take profit target at 1.5 times our risk. Now, if we let the trade run, after some time we can see the trade pushes higher and hits the target. The important tip here is to wait for the candle to close back out of the band before entering. Don't jump in on the wick because many false dips happen mid-candle. In another buy example here, we can see the price is again in an uptrend. This time the pullback is deeper, hitting the 1.0 band. A bounce marker prints after price snaps back. So we can open a buy position over here at the close, and the stop loss goes under the 1.618 band to give it more space. And instead of fixing the target, you can also trail the stop loss behind each higher low. This way, you can catch more of the move. An important thing to know here is when pullbacks are deeper, you should give your stop loss more room and manage the trade actively. Now, let's look at some sell trade example. Here we can see the basis line turns down, bars are red, and price moves into the 0.618 upper band. A rejection marker shows up with a bearish candle closing at the band. so we can open a sell position over here. At the close, the stop loss goes just above the 1.0 band, and the take profit target will remain the same. The strategy is easy to follow, but the main reason for making this video is to share this indicator with you guys. It can be used in many other ways also. I'm sure you guys can figure out many other methods and ways of using this indicator in your trading. So here we can see the price drops smoothly and target is hit. Here's a tip. If the bars are gray near the band, don't trade. Gray means the market is ranging and signals are weaker. In another sell example here, we can see the basis line is falling and sloping downwards. This is a very important condition and filters out many false signals. The bars are dark red, then we see the price rallies higher into the 0.618 band. A red rejection marker prints. That's our signal. So sell position at the close can be opened in this case. You can even put the stop loss just above the 1.0 band if you want, and let the trade run. A take profit cross prints soon after, so you can also take partial profits here and trail the rest behind the basis line. Now let's talk about time frames. If you are trading short charts like the 5-minute or 15-minute, you want the indicator to react faster. So in the settings. Yes, so. In that case, use SDEV instead of ATR. Lower the smoothing on the basis line and increase the take profit aggressiveness so you get quicker signals. Short-term trades don't last long, so you need the indicator to be faster. On the other hand, if you are trading higher time frames like the 4-hour or daily, then ATR is better. Increase the smoothing so it filters noise, and lower take profit aggressiveness so it doesn't cut winners too early. Higher time frames give longer moves, so you want the indicator to be steadier. Think of it like this: faster settings for shorter time frame charts, slower settings for longer time frame charts. So this is it. The Fibonacci Entry Bands give you a clear way to trade. The basis line tells you the trend. The bands show you where price is likely to bounce or reject. The colors warn you about ranging markets, and the markers confirm entries and exits. Trade pullbacks into the 0.618 or 1.0 bands with the trend. Use deeper bands like 1.618 for bigger setups, and always manage your stops outside the bands. Use a good risk management strategy. That way, even if some trades fail, your account stays safe and you can keep trading. This is a simple, practical indicator that helps you see trends, pullbacks, and exits without guessing. If you enjoyed this breakdown, hit like and subscribe. Thanks for watching the video till the end. I'll see you guys in the next video.